Have you thought about your investment strategy for 2024? As we move further into the year, let's examine the current market conditions. We find ourselves in an unprecedented era where the financial landscape is transforming at an extraordinary pace. This rapid change has been spurred on by a combination of technological advancements, evolving investor sentiment, and significant shifts in global economic trends. In the world of investing, understanding and adapting to these changes is key. So, let's take a moment to delve into the key trends, challenges, and opportunities that are shaping the market as we know it. First, let's talk about trends. The digital revolution continues to drive significant change in the financial sector. With the rise of technologies like artificial intelligence, blockchain, and robo-advisors, the traditional ways of investing are being reimagined. This transformation is expected to continue well into 2024 and beyond, creating new opportunities for those willing to adapt. But with new opportunities come new challenges. The speed of technological advancement can be overwhelming, and for many, the world of digital investing is still uncharted territory. This tech-driven shift has also ushered in a new era of market volatility, with rapid swings in asset values becoming the new normal. However, these challenges shouldn't deter you. In fact, they should motivate you. Why? Because they present a wealth of opportunities. Technology is democratizing investing, making it more accessible than ever before. And while market volatility might seem daunting, it also offers the potential for high returns for those who know how to navigate it. The investor sentiment is also evolving. More and more people are recognizing the importance of sustainability, leading to a surge in interest in green energy and other environmentally friendly investments. This shift towards conscious capitalism is expected to continue to shape the market in 2024. So, what does all this mean for you? Well, as we navigate these market conditions, it's crucial to identify emerging investment opportunities. From green energy to cryptocurrencies, being in the know will help you make informed decisions and potentially reap substantial rewards. As we navigate these market conditions, it's crucial to identify emerging investment opportunities. With new challenges come new opportunities. Let's delve into the sectors showing promise for growth this year. As we navigate through 2024, the technological landscape continues to evolve at a rapid pace. Leading the pack are emerging technologies such as artificial intelligence, machine learning, and the Internet of Things. These technologies are not only revolutionizing the way we live and work, but are also creating lucrative investment opportunities. Early involvement in these sectors could yield high returns as these technologies become more mainstream. The green energy sector is another area showing great promise. With climate change being a pressing issue, the world is shifting towards renewable energy sources. Companies pioneering in solar, wind, and hydrogen energy are worth keeping an eye on. They're not only contributing to a sustainable future but also providing attractive investment opportunities. Cryptocurrencies, despite their volatility, continue to attract investors. As digital currencies become more accepted and integrated into our financial systems, their value could potentially skyrocket. However, it's crucial to conduct thorough research and understand the risks involved before diving in. Finally, let's not overlook the real estate sector. While it might not be as flashy as tech or cryptocurrencies, it has proven to be a resilient and profitable investment venue. Factors like urbanization and population growth continue to drive demand, making real estate a relatively safe bet for investors. These sectors are ripe with opportunities, but it's important to remember that they're not without risks. The tech industry, for instance, is highly competitive, and not all companies will succeed. Green energy, while promising, is dependent on political will and regulatory support. Cryptocurrencies are notoriously volatile and can be impacted by regulatory changes. And while real estate is traditionally stable, market conditions can fluctuate. Investing is not a one-size-fits-all game. It's about finding the right opportunities that align with your financial goals and risk tolerance. Remember, early involvement in these sectors could potentially lead to high returns, but it's vital to do your due diligence and stay informed. While these opportunities are promising, they come with their own set of risks. Investment is inherently risky, but with the right strategies we can manage and even leverage these risks. A cornerstone of sound investing is diversification. Think of it as not putting all your eggs in one basket. By spreading investments across a variety of sectors and asset classes, one can mitigate the risk of a single investment's poor performance, severely impacting the overall portfolio. For instance, if you have investments in both real estate and technology, a downturn in the tech industry might be offset by stability or growth in real estate. Hedging is another key strategy for managing investment risk. This involves making an investment designed to reduce the risk of adverse price movements in an asset. For example, if you own stock in a tech company but are concerned about potential short-term losses, you might buy a put option on the stock. This gives you the right to sell the stock at a set price, helping to limit potential losses. Another tool at an investor's disposal is setting up stop-loss orders. These are designed to limit an investor's loss on a position in a security. For example, if you bought a stock at $50 per share, you might set a stop-loss order at $45 per share. This means if the stock price drops to $45, the stock is automatically sold, preventing further losses. Let's consider a hypothetical scenario. Imagine you've invested heavily in a single tech company. Suddenly, there's a market downturn and tech stocks plummet. If your entire portfolio is tied up in this one company, you could face significant losses. But if you've diversified your portfolio across multiple sectors, hedged your bets with put options, and set up stop-loss orders, your losses could be significantly less severe. Remember, risk management isn't about eliminating risk entirely. That's impossible. It's about understanding the risks, planning for them, and establishing a strategy that aligns with your investment goals and risk tolerance. Effective risk management is only one piece of the puzzle. Global economic trends also have a significant impact on investment decisions. The global economy is an ever-changing landscape, so how could inflation rates, geopolitical tensions, or major policy changes influence your investments? Let's begin with inflation rates. As we venture into 2024, inflation continues to be a hot topic. When inflation rates soar, the purchasing power of money decreases, impacting the real return on your investments. Higher inflation may lead to an increase in interest rates, which could potentially impact borrowing costs and corporate profits. As investors, it's crucial to consider assets that might perform well in an inflationary environment, such as commodities or inflation-protected securities. Next up, geopolitical tensions. They can be unpredictable, and their impacts on the markets can be significant. For instance, conflicts can disrupt supply chains, causing a ripple effect on global trade. This can lead to market volatility affecting asset prices. However, it's also worth noting that geopolitical tensions can create investment opportunities. For example, defense stocks may rise during times of geopolitical unrest. Lastly, let's consider major policy changes. Government policies can have a profound impact on the investment landscape. Whether it's a new tax law or a shift in trade policy, these changes can affect corporate earnings, trade flows, and the overall economic outlook. It's essential to stay informed and adjust your investment strategy accordingly. So, what does this mean for 2024? Well, the landscape is likely to be shaped by these global economic trends. Inflation rates might prompt investors to reconsider their asset allocation. Geopolitical tensions could lead to market volatility and unique investment opportunities, and major policy changes might necessitate a re-evaluation of investment strategies. But remember, while these trends can be influential, they shouldn't be the sole driver of your investment decisions. A well-diversified portfolio that aligns with your financial goals and risk tolerance is key. While we can't control global trends, we can embrace technology to transform our investment strategies. Stay tuned for our next segment, where we'll delve into how tech-driven tools and platforms are revolutionizing the investment world. In the digital age, technology is revolutionizing how we invest. Artificial intelligence, or AI, is making waves in investment circles. AI can analyze vast amounts of data, spotting trends and making predictions faster than any human. However, it's not without its drawbacks. AI systems are only as good as the data they're fed, and they may miss nuances a seasoned investor would pick up on. Next, let's talk about robo-advisors. These automated platforms can manage your investments, rebalance your portfolio, and even provide financial advice. They're cost-effective and accessible, but they lack the personal touch of a human advisor. Blockchain technology is another big player. It's providing transparency, security, and decentralization in investment transactions. But it's still a relatively new technology, and its widespread adoption is yet to be seen. So whether it's AI, robo-advisors, or blockchain, these technologies offer exciting possibilities. They're not without their risks, but when used wisely, these tools can be game changers, as shown by many successful investors. Success in investment doesn't come overnight. It's a result of informed decision-making and strategic planning. Consider Jane, who dived into the green energy sector early, banking on its potential. Or Tom, who diversified his portfolio, minimizing his risk during market volatility. Each one, in their own way, navigated the ups and downs of the market, learning, adapting, and growing their wealth. Their journeys underscore the importance of staying informed, being proactive, and planning strategically. These stories illustrate that investment is a long-term game. So how can you, as an individual investor, navigate the future of investment? The answer lies in 3 key strategies. First, consider starting an investment fund, pooling resources for greater financial leverage. Next, be a lifelong learner, continuously educating yourself about market shifts and trends. Finally, always approach investment as a long-term game, understanding that patience often reaps the greatest rewards. Remember, the future of investment is not a mystery to be feared, but an opportunity to be seized. Thanks for watching. Please like and consider subscribing if you enjoyed the video.